Nirmal Bang, ladies and gentlemen. I'm Hiral. We have with us Ria Singh, senior research analyst at Currencies, joining in. Ria, welcome to the show. Ria, my first question coming to you is, overall, if you see the dollar index, it's at a 20-year high already.
Right.
What's causing this, and how do you see it moving forward?
Hiral, if you look at the current numbers that has come forward, even if you look at the minutes, they have clearly stated that inflation is their major concern. They want the inflation down. Secondly, the unemployment numbers is at all-time low. Uh, Thus, the major criteria why they were not doing any liquidity skews was because the unemployment was very high during the pandemic, time. But right now, it's at low, and the inflation numbers are due today, which is expected to be at 8.8 to 9%. So everything is right now factoring in that Fed will continue with the 75 bips rate hike again. Same, this is indicative if you look at the US 10-year bond yields also. They were trading at around 2.66, 2.86, around those ranges. And once the minutes came in, the unemployment numbers came in, and the statements from the Fed panels came in, I think everything had fueled in that the rate hike will be of 75 bips. So this is the reason why we are seeing such a huge rally into the dollar index, because it is also raising fears of recession. Uh, Thus, though the reaction from the commodity falling, steep slide, the demand getting hampered, and dollar index at the highest, all safe havens. So this is all indicating a recession fears into the market right now, and this is the reason why we are seeing dollar index at a 20-year high. And I think it will retain that position unless as long as the major central banks around the globe is on the liquidity squeeze front. So, of course, the inflation is on the rise. Unless there is a decline in the inflation and a softening of the pace of the liquidity tightening happens, you'll see the dollar index on the higher side. For a long, even from short to medium term, I think 105 is the base that they have formed right now, and it will respect that going forward. So 110, 109, 110 could also be seen in the near future.
Right. So with that, if you see in terms of the broad rally in the US dollar, even the trade deficit for India, which is ballooning, is somewhere adding further pressure to the rupee. And you've seen the rupee already hit a fresh historical low of 79.57 in today's session. So where do you see it moving? Do you think this week we could see levels of 80 already?
Yes, definitely. I think by weekend you'll see it. Even I think in today's session there is some intervention that is happening by the RBI, but it is maintaining the levels of 79, 70. And like you said, trade deficit is ballooning, and it will continue on that front because we have stopped quite an export in order to get the inflation down. Even for India, central bank and the government main and key point right now, the main target is to get the inflation down. And regarding that, various steps in central bank and government in collaboration they have taken together. Central bank going forward with the rate hike, getting the liquidity out of the banking system, government putting barrier on the wheat exports, then again coming with the the domestic companies with their crude oil exports. So every measures that has been taken is so they have tried to get the exports down so as to get more of the stock into the domestic market, thus getting the inflation down. So even on that front, the forex inflows will be affected, right? So trade deficit will definitely put a pressure on the Indian rupee going forward. And as far as inflation go, it could soften, but I'm not seeing it softening to quite a good extent in order to have any major impact on the Indian rupee. So 80, 80.50 is the upcoming levels that you can see. Only the intervention, whenever there is intervention and rupee comes down, the best strategy is to go long into the Indian rupee right now.
Right. And overall, if you see in terms of the euro, the
Hmm.
weakness in the euro is also somewhere playing a role in pushing the dollar index higher, right? So
Right.
the euro is hovering close to a 20-year low, and
Hmm.
the near parity to the dollar amid concerns that an energy crisis could tip Europe into recession as well.
Hmm.
So how are you seeing it in terms of the euro as well?
Well, they have ECB monetary policy scheduled in this month, towards the end of the month, and we could see them going for a rate hike of around 25 to 30 bips. There's also monetary tools that they'll be coming out called as fragmentation tool. So what exactly they will be targeting in that and how it will play out in the longer term is something of the statement that we'll be looking forward to. As far as the recent meetings that they have done, they are still into discussing the anti-fragmentation tool. So whether they'll use it or not will be a different, debate. Of course, the parity is due to the energy crisis, and it could even go below the parity. I think dollar could even get strong against the euro, because if you look at the energy crisis, there is no alternative channel that has been created, right?
Mm,
So, and with the 10 days stop that Russia will do on the natural gas, and the Germany, one of the big economies into the Europe, the energy companies there are going into the squeeze on the are facing squeeze on the margin, and have stated to the government that they are facing difficulties into functioning. So obviously, all the energy crisis is putting a dent into the Europe economy. And if this continues and there is no alternative channel that could be created, I think they could be facing a very bad winter this year. So there has been talks of creating a community to focus on the winter issue as well. All in all, if you just look at the bigger picture, the everything summarized to this is that there is no alternative chain that has been created to tackle the energy crisis right now.
hmm,
So I think this is one of the reason why, though the crude oil has fallen every, from its highs, there is no major relief that has come into the eurozone, and it will continue to do so. Inflation could be at double digit that they could see in the coming months. All in all, nothing much of a positive news from there. ECB will have a very important role right now into their upcoming meetings, because a lot of the market and everyone will be eyeing the statement. But unless some action is taken, it could continue with the 1:1 parity, and it could even fall below that, taking into consideration the kind of a stronghold that the dollar is commanding right now.
hmm. So what are the strategies that you would recommend?
I think you could definitely go long into the USD INR above the level of 79. Go for a target of 80.10. You can keep a stop loss at 79.56. So this is one strategy that you can go forward to. Japanese yen is also at the lowest. I think you can also go long into JPY INR for a short term. But the volatility is high, so keep a very strict SL into JPYINR. Go long above the level of 58.40 for a target of 58.65. Keep an SL at 58.20 levels. So JPY INR, that is for, I think one should stay away from Euro INR and GBP INR, because the kind of momentum that we are seeing, it is into a decline, but the retrace that is happening into it is quite volatile. So stay away from Euro INR and GBP INR right now. There's a lot of turmoil into their economies, and same could be reflected into the currency trading session as well. Uh, so these two strategies you can go forward to. But if you want some levels into the GBP INR, it could be 94.20 is a very important level. If it breaches that, it could even GBP INR could see level of 93.83. And for INR, the support is around 79.86. If it breaches that level, you can see 78.85 into Euro INR. So all in all, a bearish stand on both the currencies. You can just follow these support levels in order to take a trade into both these pair once they've reached these levels. Avoid going long into these two pairs.
Right. So these are the strategies one should be looking at as well. Thank you, Ria. Thank you, participants, for joining in.
Thank you, Eden.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.